Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look at some of the major currency pairs versus U.S. dollars. We head into the new Asian session for August 8th, 2023. We'll start by taking a look at the Euro versus U.S. dollar, and what we see in the price action on Monday was a move to the downside and a move back to the upside, almost near identical in its movement, but did fall short of the Asian session high price in trading in the New York session here. But we started the day above the 200-hour moving average, just a green line in the chart, and we're ending the day above the 200-hour moving average at 1.0995. So as long as the price can stay above that level in the new trading day, the bias remains more to the upside. On the top side, we do have the 38.2% retracement as a key target to get to and through. Also near that area are recent swing highs. The swing high right here came in around the 1.10489 level, and this high came in at 1.10449. That both of those were just below the 38.2% retracement, which is currently at 1.10502. So going forward, if the price can stay above the 200-hour moving average, this is a key area that we need to get to and through. If a price on a trend move can't get above the 38.2% retracement, it's just a plain vanilla correction. And what is a more downward bias in this pair, that is still the threat. So we'll also be watching the 200-hour moving average and the 100-hour moving average below for confirmation that the corrective move is not really going to make it to the 38.2% retracement. So that's the importance of the 200-hour moving average in trading here today. The price did find support buyers against the 100-hour moving average. So we're keeping the tilt a little bit more to the upside for this correction idea, but we need to stay above the 200. We need to stay above the 100 to have that be proven correct. Let's take a look at the dollar versus yen next, and again we'll stay on the hourly chart. And what we see in the price action today was in the Asian session, the price did move below the 200-hour moving average. Now on Friday we also moved below the level here, but could not sustain momentum, and the same was true in trading here today. Once we moved above that level, we saw the market start to rotate to the upside. We did have a corrective move to the downside into the New York session that saw the price revisit the 200-hour moving average, but true to the moving average as a key support level, we did find support buyers against it this time. It failed here, it failed here, it failed here. So traders were not in a hurry to get below that level. In fact, they leaned against that level and pushed the price back to the upside over the last 6 or 7 or so hours of trading. Now, on the top side, we still need to get above the 100-hour moving average. And like the 200-hour moving average below, the last few times that the price has moved above the 100-hour moving average, we've seen failure, and a bigger move to the downside here. So we do need to get above that level, 142.647. If we're able to get above that level, that would open the door for further upside momentum. If we can't get above that level, look for a rotation back down. This is a swing area that we need to that could provide support, and the 200-hour moving average is at the low of that swing area now. If we get below 141.83, I get the feeling that this time it wouldn't find support buyers. We would see additional selling pressure to the downside. So watch the 100, get above that level. We'll look toward that area. If we can't get above the 100, we're going to look to get below the 200-hour moving average in 38.2, and then work our way down toward the 50%. Let's take a look at the sterling versus U.S. dollar next. And similar to what we saw in the dollar versus yen, the initial move was to the downside in trading here today, and the price moved below the 100-hour moving average on its way to the downside. Admittedly, trade above and below it here. But then we broke back above it in the late European, early U.S. session, and the price started to rotate back to the upside. On the top side, we have the 200-hour moving average in play that we need to get above at 127.95. If we're able to get above that level, that would open up the door for a test of the 38.2% retracement of the move down from this high. This is the last swing high to the low price that we saw just 2 days ago during Thursday's trade. Getting to the 38.2% retracement remains a key target, as I mentioned before. If on a trend move to the downside, the price can't correct to and through the 38.2% retracement. It's just a plain vanilla variety. So not only do we need to get above the 200-hour moving average, need to get above the 38.2% retracement to prove that this isn't just a plain correction and what is a bigger move to the downside. So key levels in the going into the Asian session: 200-hour moving average, 38.2% retracement. Let's take a look at the Aussie versus US dollar next. And this currency pair also had lots of ups and downs in trading here today. And the downs got back below the 100-hour moving average in this trend line, which kind of takes this trend line out of play here. It's really not paying attention to it. But what we will look at going into the Asian session as markets get heated up is if the price can use this 100-hour moving average barometer and move away from it. Okay, right now we are above the 100-hour moving average in this little swing area through here. If we're able to hold above that level, there is a potential that we could see further upside momentum with a test of the 200-hour moving average as a potential, and then above that the 38.2% retracement. The pattern is similar in a lot of these currency pairs with the price off the lows, but we need to get above other levels, including things like moving average and the 38.2% retracement. Conversely, if we break below the 100-hour moving average and move below this swing area down to 0.6555, that opens up the door and have traders looking toward the low price that we saw in last week's trading at 0.65135. Looking at the daily chart, that low that we saw in trading last week took the price below this area through here, where we had a number of different, just squint your eyes, you see this area right here, a number of different swing lows and swing highs. We did move below that area here, and we moved below it here, but each of those times the price momentum did fade. I mean, it was a few days before it did fade, but most of the lows and highs came in between this area down to 0.65468. So if we start to break back below that level, be aware of that. That increases the bearish bias, and we look toward the low price that we saw in last week's trading. So there you have it. A look at least 4 of the major currency pairs as we head into the new trading day. That'll get us going, won't it? My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.